This is a very significant milestone in the Golpu journey. For a greenfields project in Papua New Guinea, these returns are quite good. When we talk about creating the infrastructure for this stage one, that will underpin our infrastructure for the rest of the proposed mine development. The ore body allows for a staged development, which allows us to target the various parts of the ore body that allows maximum cash flow up front and deal with some of our capital expenditure requirements to start up. Once built, this mine will be in the lowest cost quartile of copper producers. 70% of our revenues will be copper driven. This total resource has an NPV of $2 billion US with a 17.5% IRR. Once again, the other benefit that comes through out of this is you're actually able to fund this ongoing development as part of your mine development. So you're able to progress this without going cash flow negative.
The capital is spread over a long period of time. So it's not that we've got to come up with $875 million in year one. We believe those amounts are very affordable and very payable. Our current cash flow is substantially more than that. If the government were to buy in, it will just be more easy to do that.
Block Cave 1 will access with twin declines from the Watut Flats. For those of you that have seen the terrain there, the decision was made to place the infrastructure on the Watut Flats. It makes it a lot easier to construct. Your operating costs is a lot less. And it also enables you to make sure that you deal with mine safety and productivity. The twin declines is 3,000 meters to reach the ore body. The initial development has a ventilation shaft, which is required for Block Cave 2. Block Cave 1 will basically mine for 4 years and then step into Block Cave 2. As part of the expansion options, then through debottlenecking, we'll turn the Block Cave 2 mine profile into a 7 million ton per annum profile. There's just some minor tweaks that's required for the process plant to enable that. The next phase would be that we step up the production profile to 14 million tons per annum, followed by a Block Cave 3 development. For Block Cave 3, there's additional access and decline developments required, additional ventilation shaft, and then it also assumes that we'll be able to use deep sea tailings placement post the Watut terrestrial tailings storage facility. The project assumes that we'll get a special mining lease in June 2018, and activities basically commence in July. The reason for this timeline is that you've got to engage with various levels of government, local level government, national government, landowners as part of your permitting phase before you actually can commence activities. Part of the permitting process also see you having to prepare the various environmental permits. It'll take us approximately 5 years to get BC1 into production, and that is just to allow time for the construction of the declines. The challenge of a block cave mine is you've got to spend all your capital up front. The final stage of the expansion would basically see you build another block cave mine, Block Cave 3, below Block Cave 2. That would be another 200 meters below Block Cave 2, require decline access development, an additional ventilation shaft, as well as the construction of a deep sea tailings placement facility. All of that is allowed for in that 1.3 billion incremental capital that's required to progress to that stage.